Hello and welcome to Pro Trader Strategies Market Commentary for Wednesday, April 11th. My name's Eric Wilkinson. Some of you may recognize me as the Wolfman from CNBC, Fox Business, or even the Wall Street Journal for my commentary on everything from economic to geopolitical and market analysis. Please take a moment to read over this disclaimer as it talks about everything that I talk about in these market commentaries. This is not a solicitation to buy or sell any of these securities or strategies. I don't know your risk parameters. I don't know what you're in your portfolios. So therefore, it would not be responsible for me to tell you that what I'm doing is appropriate for you. And please remember that past performance of any trading system or methodology is not necessarily indicative of future results. All right, having all that out of the way, let's get it on with some economic data. Across the pond, not a whole lot going on over there, as we can see that from the markets, to be quite honest, and or here for that matter. We did get industrial production coming out of the European region, came in at a negative 0.8%, expected to be a positive 0.1%. They did revise last month's number up from negative 1% to negative 0.6%. So bit of a wash there, kind of close, but at the end of the day, you know, it's still a little bit negative because those numbers continue to go down and are in negative territory, which, you know, you really can't spin that any other way, to be quite honest. Then here in the United States, we got importer prices came in at unchanged, expected to be 0.2% increase. So still not seeing that inflation I've been talking about. Finally, we got natural gas storages came in at negative 19 billion cubic feet, expected to be a negative 11 billion cubic feet. So more of a drawdown there, probably due to the unexpected cold that we've been seeing across the April snow showers everywhere, except for here in Arizona, to be quite honest. All right, anyway, let's move on with the overall markets. We've got crude oil coming off just a little bit by about 99 or 19 cents. You know, it looks like it's just pretty much a break in the action. There's a lot of tensions going on overseas, tariffs, things of that nature, everything kind of stirring up the overall economic picture. But today, crude oil taking a bit of a breather. Even after yesterday's big build, we still saw some strength. So crude oil still continue to march higher, 3-year highs in crude oil. All right, gold futures, we talked about this. Gold futures blasted off to a level that we haven't seen in basically a couple of years. But today, a complete and utter failure of the market, down almost $20 on the day after yesterday's massive rally, despite the fact that the equities started, you know, actually when the equities started rallying, the gold did come off a little bit, but today, just falling out of bed. Then on to Bitcoin futures. Maybe people are pulling their money out of gold and finally starting to buy in Bitcoin futures. Actually, I think it's a little overdone to the upside by $7. One thing that the bulls are going to want to break is the 23.6 Fibonacci level. That will make it a newer high. We're seeing consistent lower highs and lower lows, which is consistent with this downward trend that we're seeing after this dead cat bounce. So we got a tweezer top there, but we want, if you're a bull, I'm not in Bitcoin, but if you're a bull, you want to get above that 23 Fibonacci level, which just happens to coincide with 90, let's call it 9,300 would be a good mark to finish above for the breaking of this downward trend. If we start seeing it start to roll over again, all it is lower highs and lower lows. So that lower low would come in line with somewhere around that 58.80 that I've been talking about. All right, the VIX coming off a little bit as we're seeing the overall markets rally out of the 20s, as you can see there. But Dow Jones still has those levels that we've talked about that they need to get through in order to start getting some momentum. And as you can see, we're right on this downward trend line. And we've seen this 50-day moving average roll over. So all of these things coming into line, acting as resistance for the bulls. So it's going to be an arduous task. They're really going to have to consolidate, get everybody on this bandwagon in order to get through it. Not really showing up as much in the NASDAQ, but yesterday NASDAQ had trouble getting above this value area high, which I was talking about as resistance. Today pierced above that. Now the next thing for it to go to is that same 23 Fibonacci level that we are talking about, or very similar line up with the Dow Jones, this 50-day moving average lining up with that 23 Fibonacci level, which is going to act as a more of a resistance than what you would normally see outside of that. On the mini S&Ps, and we talked about this, right now we have all of these different lines that we've got to get through as resistance. Every one of those is going to be a resistance for somebody. I have a lot of them lined up. Some people will be looking at the market profile. Some people will be looking at the Fibonacci extensions. Somebody will be looking at just the regular Fibonacci retracements. So all of those things coming in line and around the same place. So a lot of people, even though they might be looking at different types of technical setups, we're getting about the same areas for all of them. So a lot of people will be keying on those. And again, another arduous task for the bulls to get through. And you can see it a little bit better here on the E-mini S&P 30-minute chart. These are 30-minute candles, and it includes the overnight session. As you can see here, overnight just kind of consolidated. Coming into the day session, we started getting a little momentum to the upside, and then on the opening, we kind of just died out. Really nothing going on, very quiet, seems very low volume trade going on. But this is that area that we are going to be needing to get through. As you can see, this 2665 area. So let's settle above that would be pretty good for the bulls. We could even say above 29, let's call it 2970 settlement would be very nice for the bulls to get above. All right, on to the trades that I've done. I was spouting off on Twitter yesterday with Jeff Mackey, a good friend of mine, and going back and forth on just option strategies around BBBY. He had been writing some calls. I told him I think he should write all the calls out because he didn't want to get crushed with volatility. And if he wanted to still play that directional, get rid of the calls, get into some puts. Well, my idea of getting into the puts clearly wasn't the right idea. They actually beat on earnings just like I expected. I expected them to beat on the top line and the bottom line earnings numbers. They did. And then they started talking. And what happened when you start talking? Forward guidance, not so rosy as the Christmas holiday season. And therefore, we take a crash course in what to say to investors. This clearly not the answer. Anyway, beating the market maker move. I think the market maker move in in Bed Bath & Beyond, Bloody Bath and Beyond, or Bloodbath and Beyond. How about that? As my friend Jeff Mackey was calling it, down $2 was the market maker move. Down $4 is what happened. It was a market maker move of $2 in either direction. Outpaced that by double, so that didn't help my strategy at all. I even said I was selling the 16 delta, which is really close to what I did. I actually went to about the 20 delta to get a little bit more premium and obviously increase my risk. So in my IRA, I went in and sold the April 19.5 puts for 32 cents. I had to buy them back for $1.87, so a nice fat loser there. I covered it right on the open. That forward guidance, anytime they do that, you're just not going to get a bounce back, especially with something like a retailer, brick and mortar. That is the wrong thing to say to investors right now, is that your brick and mortar is not going to do well. And that's what happened here. So I just decided to pull it. Wasn't going to try and work it out any longer for directionality. The way that they were speaking got me out immediately. So over in my IRA, I had it on a similar trade, and I did the April, sold the 19.5 puts, bought the 17 puts to define that risk. Really just buying the first strategy I can for a nickel, or first option I can for a nickel to define that risk, limit my margins a little bit. It didn't really help me here on the limiting of risk, as you can see, where my risk was limited at 17, and we are currently trading 17.39. So it's still not at a max loss on that aspect. But I got out early enough in that strategy, selling the 19.5s, buying the 17 puts in the April weeklies that expire tomorrow in both of these strategies. And I originally sold that for 30 cents, bought it back for $1.71. So loser in both of those, about by $1.50, I'm guessing. So, rounding it off. So both of those a loser on the earnings trades. We're right back in the earnings season. You'd think it just left it. We're right back in. Starting off tomorrow again with the banks. Banks usually come in first. We've got Citi. We also had Delta this morning, which I didn't play, but we have the bank stocks, which are Citi. I think P&G is another one, and one other bank I can't think of right off the top. JP Morgan coming out with earnings today. for tomorrow right before the open. So I'll be playing those this afternoon. So keep your eye out on Twitter for me to talk about those. The only other trade that I'm looking to get out of is Boeing, believe it or not, already. With Boeing's sell-off yesterday, I talked about this. I think that a lot of people were canceling the Airbus and switching over to Boeing. That being said, I wanted to play Boeing to the upside, and I sold the April 300 puts, if you remember, for 77 cents. We're getting a little bit of volatility coming out and directional move up $6 today. Right now it's trading around 30 cents. So I'm working a bid for 30 cents. I believe it's offered, or it's trading around 37. 37s are trading. I'm 30 bid, 37s are trading, 7s are trading. Anyway, it's probably 36, 7, 6, 7, 6, 7, 7s are trading. Anyway, that's what we do on the floor. But a little off the market, but if I get more of a directional move, I might be able to get those off today. So I wanted to give you guys a fair warning on that. All right, that's about it for today. Tomorrow's webinar is going to be a really good one. It is going to be on the poor man's covered call, which you need to know how to do, especially if you have a smaller account or you just want to limit some of your margin. Buying a stock is pretty expensive, and I'm going to show you how to set this up with options to get the same moves you would get money-wise as if it were a stock. No, you're not going to get the dividend and things of that nature, but you will still get that directional move. And I'm going to show you how to lower your basis on that using covered calls. All right, so check that out tomorrow in ProTraderStrategies.com. Yes, you can go and figure out how to do a poor man's covered call, but they're not going to give you the strike location to increase your probabilities of success, and I'm going to talk about that. So check it out. All right, if you can't take that, take it easy.